Good morning and welcome to this weekly market update from MRC Markets. Today is the 4th of April 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss and Aussie. Actually, we can have a look at gold as well. I might as well get them in and look at that a couple of weeks. Where are we? Here we go. So yeah, we'll go through Euro, Dollar, Cable, Dollar, Swiss, Aussie and gold. Just to review what has been going on in the markets over this week, well, since the last video, which would have been last Friday. And yeah, just give some sort of outlook for next week, really, just in terms of what setups are out there, what ones are in play. In fact, on most of these charts, I think in fact all of them have pretty much left the same. Well, I've left the charts exactly how they were from last week, because not a massive amount has changed in terms of the setup, as we will see from this initial chart here. We'll not make any trade calls recommendations in this video. Trade at your own risk. If you could please read a full disclaimer on our website, which is www.mrcmarkets.com. And for any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple moving average, and the gold is a 200. Okay, let's have a look at the euro dollar. So this is, in fact, this is a daily chart. Let's just quickly flip it to the weekly in terms of what happened, sort of how did last week's candle close, and the setup we're looking at. So this is the setup we're looking at. This is the fib from the year low to the year high. We said last week, so we came back down, we tested this key 50% area and the sort of 137.50s. We said the 137.50s because it was previous resistance around here, remember. So we had these 4 where I'm hovering the cursor over these 4 candle wick spikes, spiked above, closed below. So maybe we would have got a previous resistance turn into new support. Hasn't quite worked out that this week. We are actually below this 50% at the minute. I mean, you have to bear in mind, a lot of people are going to be looking at this move here. To be honest with you, this is the much bigger move. So maybe the healthier retracement is down towards this 50%. But there's nothing wrong with this fib. It's all about how the action plays out, in my opinion anyway, especially as we're doing these videos on a weekly basis. Obviously most people watching will be sort of day traders, in and out of the market each day, every day. So yeah, I mean, in terms of this weekly candle, it's all about the weekly candle close. I mean, a lot of people will be looking, I mean, it's technically in the middle of this sort of 50%, 61.8% range, so the weekly candle close may not be of massive interest, but do not be surprised, especially as it's non-farm payroll today. Things can really change. I mean, if we get a really weak number, then this this bearish candle could turn into a bullish hammer. So the weekly candle close will definitely be interesting. And yeah, I've just flipped it to the daily because it's obviously still the same setup. And you can see what we've had. We had these couple of the candle spikes below. I think I tweeted this chart. We've got the 50 SMA as well, that initially holding. We've got the daily candle close below that, but it did close above the 50% retracement. In fact, I think that's pretty much bang on it. You can see that like today's open, this sort of, I think it's closed. I think it opened just below it actually. So yeah. Yes, I mean, in terms of the daily candle close, this 100 DMA is quite interesting actually, because well, obviously it's just a key indicator. So if we do close above that, we should get some sort of bullish momentum into next week, you would have thought. But to be honest with you, it really is all about the non-farm payroll number today. If we get a weak number, then things can really change. And you can see well, currently today the key line in the sand is the 13700s level. I've got that on there. It's also previous resistance if you look to the left here where I'm hovering the cursor over. So yeah, things can really change. I mean, I would have thought if we got a really big number, then this will just all get blown out, and then this would, in terms of this daily chart, I thought this fib would then come into play then. Yeah, and you can see the weekly's got some previous support around here as well, and the moving averages are around here as well, so do not be surprised to see that happen. But Yeah, right, that's Euro done. Let's have a look at cable. Cable, I've left this up from last week. Nothing majorly has changed. Let's flip it to the weekly though quickly, just to keep some perspective in mind on what we're sort of looking at in this weekly. It's all been saying on this weekly for quite some time. We do some sort of healthy retracement, I think, because we've had such a strong uptrend here. Of course, it doesn't have to retrace. It can keep on just grinding higher and higher, but I think personally the odds favour some sort of healthy retracement. The moving averages are down here as well. We have had some cross up actually. This 50-week moving average has crossed up above the 100 and 200-week moving average. But you can see, well, yeah, because not last week, the week before we spoke, they had that big heavy candle there. But then last week's candle, just a pure lovely bullish candle there, bullish continuation. It didn't quite engulf the previous candles a wick. You can see that higher wick there. But still, it's just a solid green candle. It just shows you the buyers still want to keep grinding this higher, but I think it will struggle at these levels, to be honest with you. And you can see it has struggled this week already. This current week, we sort of got the spike above the 166.50s. We're now below that. So, in terms of this day, I mean, yeah, you can see that fib there. But I think in terms of shorter term moves, I'm just going to delete this for now. We spoke about, in last week's video, I remember, what we spoke about, there was two moves. We had this one here, which was buyers coming in off the 61.8. This is the sort of recent swing low, the sort of February lows to the February highs. That move, we got some nice support off of the 61.8% retracement. We grinded higher, but you can see where we're getting capped at is the fib from the other side. So that move there, from high of February to the low of March, you can see we're getting capped off this 61.8. And we're grinding lower. I've left these pink 50 pip levels on there because we've been speaking about them for the last sort of few weeks, how they've been acting as nice support and resistance in terms of intraday stuff. There's some really nice moves off of these levels. Another thing which I think is quite interesting though, if we flip it to the sort of, I mean that's pretty much it in terms of the daily, to be honest with you. But if you want to look at the 4-hour chart or even the 1 hour, I mean it would be the same thing, the same move. It's this fib here, so that's I think it's the 23rd of March low here to around, I think it's the 1st of April high. You can see we're getting some sort of support off of the 50% current. It's just a move that I thought a lot of people would be looking out for. It's the same on the 1 hour chart if I zoom out there, so it's the full 1 hour chart, or if you flip it to the 4 hour, it's that move there, and then the daily you can see it looks much smaller. But yeah, I mean, yes, I think it was yesterday. Yeah, it was. We had a nice sort of a couple of 1 hour candles, nice spikes, decent length of lower wicks there, and a brief grind up, about 50 pips or so. But you can see we got sort of caught at the 100 SMA here, and it's holding it back. But I would not be surprised to see it come back down to this 50%, form a double bottom and rotate higher. Or if it wants to come down to a healthier level, you can see these 165.50s. These 165.50s coincide with this 61.8% retracement here. So key level, it could be a nice sort of confidence. You can see here where I'm hovering the cursor over at in a minute. We had previous resistance at that level to the pip. So yeah, some interesting stuff on cable. It has been very technical in terms of the fibs and the round numbers. And this is the one thing that I'm focusing on in a minute in terms of sort of intraday stuff. This is a small setup in play, which has been very interesting. Okay, let's have a look at the dollar Swiss. I've left this chart up from last week because nothing majorly has changed, so I've just flipped it to the weekly briefly. You can see this is the fib from the high of the year to the low of the year. We said keeping up these 8900s, so just below the 50%, but you can see we're pretty much testing the 50% retracement. We're sitting right on it at the minute, so weekly candle close will be very interesting. Are we going to get a nice spike and reversal down? I think if we do, then it will be because of a weak NFP number. Well, if we do get a weak NFP number, then I think we'll definitely come down, because it should be weak for the US dollar. Yes, I mean, if you look at the daily chart, yesterday we did actually have a spike off of it pretty much to the pip, you can see there, and the 100-day moving average as well. So we formed a bit of an upper wick, and today we just, what normally happens when you have an upper wick on a candle like that is the next day the first thing it will do is go back up, and then it'll either engulf it or it will just form another upper wick. Normally it will just form another upper wick, and perhaps form some sort of reversal candle. You can see, because we spoke about this for a while, why this 50% I think will be an interesting level, because we have previous support around here as well. So that could turn into previous resistance. There is also previous resistance here as well. You can see where I'm hovering over the cursor. That's to the pip as well. So it's an interesting level, this. Also, one level we'll stick up is the 89.50s as well, just in case we do get a bit of a pop up from NFP, because that 89.50s does coincide sort of in between the sort of 50% and 61.8% range, so we can easily come back up there, test that, and still close below. But no, it's definitely all about NFP today. If we get a weak NFP number, then we really could reverse. But if we get a good one, then it could just blow all of this out of the water. So it really does hang on that number today, in my opinion. But yeah, that's the only real setup I'm focused on, to be honest with you. In terms of the shorter term stuff, nothing majorly of interest here. I mean, all week it's just been a bit nothing great. I mean, in terms of 1 hour, you've got some nice reversal candles here. Nice one there off of sort of previous support. If you look at that there, obvious sort of 1 hour candle spikes below, decent support. That was the 88 25s. Nice 1 hour candle there, rotated higher. So that's the way. If you look at intraday stuff, just keep it nice and simple. Okay then, that's the dollar Swiss. Let's have a look at the Aussie. Sorry if I'm sniffling, by the way, I've got a bit of a cold today. Yeah, so in terms of this Aussie, it's this. I've left this chart up as the same it was last week, because nothing has changed. You can see just by looking at these daily candles what has gone on this week. It's just literally gone sideways in between the 0.92s and the 0.93s. So yeah, nothing really has changed. But I've kept this fib up because I think it's an interesting one, because it's a sort of previous swing low on the 4 hour chart. That swing low is a bounce off the 50%. Remember, in fact, I'll just remind you. Just in case you've forgotten, so it was that move there, remember, off the 61.8 to the pip and that 0.90s. So yeah, we take that low and extend it to the new high, and that's the move I'm looking at. But yeah, it just needs a breakout. You can see on the 4 hour really choppy stuff. I've hardly even looked at Aussie this week because it has been interesting to me. So yeah, the same thing really. Just I think it may, if we do get a retracement, keep an eye on this fib. The 50% and 61.8 sort of coincide these nice round numbers here, and then you see the 200-day moving averages flattening out as well at that previous resistance zone we spoke about. You see that spike high, that's where we've got. I wish I'd change the colour of that, because I like the normal supports, that sort of brown colour, and then the round numbers just keep it pink. It's just easier to see, in my opinion. Yes, that's Aussie. Nothing really changed. Let's have a look at gold. So if we look at the weekly's not majorly interesting. Let's keep it to the daily. We spoke about this like a few weeks because we haven't done gold in a while. But this was the move that I think is of interest. It isn't being that technical. You normally it's nice to see a nice sort of spike off of the 50%, then rotate higher. Funnily enough, we did get a spike off of that. You can see that candle there. So we got the spike. It formed a nice sort of reversal candle, to be fair, but it did have a bit of upper wick on it, and that has sort of capped it. You can then see the next 2-day candles. We tested this 200-day moving average, and it is capping it. So in order for it to bounce up, we just need to blast through that 200-day moving average to see any sort of momentum. But at the minute, it's just chopping in between, similar to Aussie. So the commodities are really chopping around at the minute. Obviously, Aussie is a commodity-linked currency. So yeah, I mean, in fact, the weekly is quite interesting in terms of that fib, because it looks just a bit clearer and a bit more technical, really. So you can see last week's candle we spiked, tested that 50%, closed above, not a major reversal. But this week's candle was doing pretty much exactly what last week's candle sort of identified. It's not a reversal, it's tested it. But this week is the sort of the real test, and it's spiked below, and as it's similar to the other pairs, it was similar to sort of Euro cable. If we get a weak NFP, I would not be surprised to see this turn into a very strong sort of hammer candle, and then we really could fly up. And then in the next sort of couple of weeks, we can then sort of fly up and take out these 0% lines. So keep an eye on the weekly candle close. I definitely will be. on this gold, but that's the main setup in play. There's nothing in terms of the 4 hour and 1 hour. I mean, well, actually, if we look at the 4 hour, or in fact, let's just leave it to the daily because it's the same thing in the 4 hour. If we do get a pop up, then this will be an interesting fib that I would have thought a lot of people would be keeping an eye out for. You can see the 50% coincides with previous resistance there as well. So yeah, that's just the counter fib move. But no, definitely keep an eye on that. If we do get a weekend FP, we pop up. We could easily pop up, test that 50% reverse, and come back down. But they're definitely the two moves, and the only two moves that are really worth looking out for, in my opinion, on gold. Okay, then that's all for today. Hope you found that video useful. Hope you have a great rest of the week trading. Keep an eye on that NFP because that will move the markets today. Yeah, and have a great next week trading as well, and I'll catch you on Friday. Have a great weekend. Thanks for watching.